Hello, everybody. Dr. Richard Smith here once again on Cycles TV. May 27th, 2025. Whoa, where is the year going? Good to be with you again today, as always, and gonna do a deep dive today. Spend a lot of time because I'm gonna be offline for the next couple of weeks as we finalize preparations and then deliver Cycles live in 25 in New York City. It's going to be an incredible event. There might be one or two spots left. If you're still on the fence, it's going to be the place to be. This is not going to be live streamed, as I've said over and over again. This is going to be where people who are serious about cycles get together and dig in person and say things and look at things that we might not necessarily talk about in public. So I cannot wait. And I hope if you are interested that you'll be joining us there too. In the meantime, since I'm taking a couple of weeks off here from this Cycles TV, want to just go over everything and kind of see where we're at and make sure you've got plenty to work with for the next couple of weeks before I see you again in mid-June. So without further ado, thanks for joining us and let's dig in. All right, so as always, we do like to revisit our last week's updates. And last week, we were looking at the risk parity portfolio of Bitcoin and gold. I love this idea. I think Bitcoin and gold clearly have a lot of reasons to be bullish right now. And over the longer term, let's just say, as part of the government debt crisis, inflation and monetary hedge alternatives, and they just work so nicely together. So last week we were about here on the Bitcoin gold combo. Then let's see, today's the 27th, so that would have been about the 19th in our chart. And you know, more gains for the Bitcoin plus gold combo. And if we look here, made this nice little chart for you. Here's showing Bitcoin and here's showing gold down here. And then the Bitcoin plus gold risk parity combo, rebalanced quarterly, back to risk parity. You know, nice little up move over the past week. Obviously, Bitcoin was up over the past week, right? Made new all-time highs. Gold was actually down a little bit. So again, Bitcoin up, gold up, Bitcoin down, Bitcoin and gold both up. Bitcoin plus gold better together. Now then, we are going to look at daily data and 2-hour data across probably maybe even 20 different assets today. Am I nuts or what? Get a cup of coffee, put up your feet. I'm going to be looking for some great trades that we could hold over the next 2 to 3 weeks across everything and in the futures markets. And then look at how we might put 2 or 3 of those trades together into an opportunity over the next few weeks. So let's take a look and see what's going on. I'm going to be using our new stability indicator. Lars talked about it in detail yesterday. We're going to be talking about this indicator a lot more at the conference. It is not available in the software to you right now. Only Lars and I have the stability indicator. We plan to make it available after the conference, but we are both having growing confidence in this indicator. We believe it's a new innovation in cycles technology, brought to you by the Foundation for the Study of Cycles. It's gradually displacing and overtaking the traditional Bartels indicator for us. So it's a serious, both Lars and I are taking it very seriously, using it actively, and we're going to be talking about it in detail at the conference and then releasing it in the software sometime in mid-June. So with that, here is the daily data on the S&P 500 futures. And the stability indicator, it started with this idea of persistence in cycles. And if you open up the info box here, right click or double click the three dots on any cycle, go to the info box, and then you'll see the cycle and then the filter on price here. And we're looking for good alignment in terms of phasing and amplitude and persistence over time in order to go into the comprehensive stability score. So the stability score plus the ranking, and the ranking really is dominated by the shape in the spectrum here, more pointy, as Lars says. If it hurts to sit on it, the better, right? So stability plus spectrum shape is what we are developing. So we've seen for a while that equities, especially the S&P and the NASDAQ, are bullish on the daily cycles, and that certainly has been playing out. So we've got this 122, 177 in the S&P, 328. That's a little long for what we're talking about today, because I'm ultimately looking for some trades from the 2-hour cycles that have support from the daily cycles. So I'd call this pretty good. 122 plus the 77. Obviously, we may get a little breather here, but still more upside in the cycles here. I'd say that's good tailwinds in the daily S&P, E-mini S&P. So then looking at the 2-hour data in the S&P 500, the spectrum looks a lot muddier. Really no cycles here that are really jumping out at me. So I don't have a lot of good vibes from the 2-hour data. If I look at the 1-hour data, even that, maybe this 252. But if I go look at that on the 2-hour data, I'd expect to see that around 126. You got this 121 here. All right. Yeah. Okay. We'll hold it. And as we look at some more things, we'll see if this is a trade that looks compelling or if we can find more compelling opportunities. So here is the NASDAQ futures daily data. And again, I'm showing you kind of the process I go through at the beginning of each week. Okay. It's a lot, but this is how I do it. Again, wow, look at that beautiful cycle right there on the NASDAQ, the 122. And it's got a stability score of 73, which is pretty much off the charts. We also got this nice 81 and this 181 here. Look at all those. That's pretty compelling on the daily data in the NASDAQ. The 2-hour data in the NASDAQ, a lot more interesting than the S&P actually. So we've got this 144 here, the number one cycle, 31's too short. What else here? Anything else? Nope. But I think that looks not bad. So I'd rather be in the NASDAQ on the 2-hour data than the S&P 500. Just seeing better overall definition in the cycles there. So I want to trade the best cycles. So, I think I'm going to stick with the NASDAQ for now. We're going to just close out the S&P. All right, the Dow. Go to profile 1. Again, I'm showing the stability score. Sorry, you don't have access to it. Hang on. So right away, we see the 174 and the 232 both look pretty good. Also, this 93. Stability score is not very good on the 93, suggesting that it's not particularly persistent over time. So it's doing well at the moment, but not really convincing us that it's reliable over time. See if I can turn off that noise. All right. So that looks interesting, right? A little earlier in the upcycle of the Dow. Worth keeping an eye on. And then here's the 2-hour data on the Dow. Kind of got this 76 here. Yeah, not as compelling as the NASDAQ. So I think I'll stick with the NASDAQ and drop the Dow. All right, now we got the Russell. 122. I think that was the same one on the daily data that we had on the NASDAQ, right? 122. So that's interesting. Anything else? Yeah, you got the 176 here. And the 73. So interesting that the NASDAQ and the Russell are basically tracking the same cycles. Let's hold that one. And on the 2-hour data, clearly got this longer term cycle out here. Just not a lot of crispness, not a lot of pointiness. And got this 120 cycle. Let's 350 and 120. It's kind of like a 1-3 harmonic, maybe. All right. So on the whole here, looking at equities, obviously equities are all highly correlated. I'm liking the NASDAQ as the primary, most cyclical asset with the, let me just turn on the RSI here on the 2-hour data as an equities-based trade. So good. All right, let's look at Treasuries now, particularly the 2-year and the 10-year. Got a really clear cycle here, this 171. It's got a stability of 84, which is unheard of. So very stable cycle. Got some upward trending momentum, although we're kind of at the top of the 171 cycle. Anything else in here? Maybe this 132. All right, we'll leave it there. And then on the 2-hour data, wow, another very strong cycle. Which looks pretty interesting. All right, the 10-year, just going to do the 2s and the 10s. That's enough coverage in treasuries. So we've also got this 170 on the daily data and the 132. You know, both of them kind of pointing down, but the momentum is not pointing down. So that's interesting. And if we go to the 2-hour, we also see this strong 248. Is that what it was on that one? It was 243, so a little shorter there on the 2-year. Momentum. Good. All right, so we got something in treasuries and something in equities now. Let's go look at metals. Gold on, this is weekly gold, of course. We know where that's at. Amazing cycle in there on the weekly data. Very strong stability, #1 ranking. Meanwhile, momentum on the weekly data continues to, I'd say, be in an upward trend, to say the least. But weekly's too long for the purposes that we're talking about. So let me go back and grab the daily data on gold. Okay. GC equals F. Okay, there we go. So we got this 280. And the #1 cycle is this 89 down here. That's pretty interesting on the daily data. But, definitely topping, as is the weekly data in gold. We knew that. The 2-hour data, some pretty interesting cycles here in the 2-hour data. Also suggesting top, but again, momentum just not really breaking its upward trend yet. So cycles are definitely saying this up move has gone on longer than expected, but we haven't really gotten the signal from momentum yet to back off. All right, silver. Anything jumping out at us in silver? The 95. It's got a good stability score. And 326. Okay. That's interesting. Looks potentially bullish. Cyclic RSI. Okay. Keep that on file. And the 2-hour data in silver also has some interesting signals here. The 111 and the 162, let's say. Okay. And then copper. Interesting spectrum here. Nothing here that gets me super excited. Okay. Oh, this was the 2-hour data on copper. Did I not have the daily data on copper up here? Let's grab that too. So copper does have a lot of cyclicality to it. I mean, look at this 2-hour. Look at how many strong cycles there are, clear cycles on the 2-hour data, the 1, 2, 3, and 4. Pretty interesting here, right? So I like it. So we've got support. Let's go back here. So copper, that's the daily data and the 2-hour data. Okay. All right, Bitcoin. Daily data. Clearly overextended. But some decent cycles. New all-time highs. Could be interesting. And the Bitcoin 2-hour data. Got a 110 here. Very strong cycle. Rolling over. Also this 82 here. But really, when the 110 is that good, do you need much else? Maybe the 293. Now we'll kind of stick with that. All right, Ethereum. Some good cycles there. Looks interesting. And Ethereum 2-hour data. Some very nice cycles here too. Number 1, 2, and 373 is a little too far out there. Let's go with that. 262 and maybe this 80. All right, US dollar. And I know we're going through a lot. Hopefully this is educational, but we're going to pull all the pieces together here in just a minute. So the dollar is interesting. Some good cycles. Not sure we even really need this 292 daily data after all. So I think that looks good. And then the 2-hour data on the dollar also interesting. So I think that like 145 here, and then maybe this 309 on the daily data. That is one, I mean, this is the 2-hour data actually. So this is one of the most interesting opportunities that I see right now in the dollar. I think lastly, right, oh, there was copper. Okay, so let's get rid of that. And we're going to look at the yen. So the yen here, at 133, 111 are, I'd say, interesting cycles. And that's daily data, and then the 2-hour data here. $123. What else looks interesting on here? Yeah, I'd say that might be about it. All right, so there's a lot of cycle analysis. Let's go back now and take a little retrospective. So we have this NASDAQ daily data that is on the, still has some bullish life left into it, into mid-June. No problem there. Definitely at a, had a lot of momentum run up. Haven't made new momentum highs yet, but there's not a negative momentum divergence particularly. So we'll see if it can pull through this little hesitation or not. But on the whole, daily cycles are bullish into mid-June. And we've got a bullishness on the 2-hour cycle here, particularly this 144 cycle. So that looks like an interesting trade to me. I might want to go down and peek at the 1-hour data and just see kind of what's going on down here. If we have some early confirmation, maybe momentum's turning up. I know the cycles aren't as supportive, but I like to see that cyclic RSI on the hourly data giving me a little confidence that when it comes to the 2-hour data, we could see some continuation of this momentum. Okay, so I like that trade, long NASDAQ on the 2-hour data into, for the next week or more. The treasuries, 2-year treasuries, we've got this big cycle top here on a very strong cycle. Momentum kind of waning. Would I want to go short 2-year treasuries? I'm not sure. Let me look at the 2-hour data. I kind of have a conflict here with the 2-hour data looking bullish on a very strong cycle, but not supported by the daily cycles. So not a big confidence trade there. Meanwhile, here on the 10-year, we've got, again, a strong, clear cycle here on the daily data, but also a conflict with the 2-hour data. So not really jumping out at me as a trade I'm crazy to make, right? Here's gold on the daily data. Turn on the cyclic RSI. That looks interesting to me, especially with the bullish dollar. And the 2-hour data kind of supports that, but still would like to see that momentum fade a little bit. Maybe we could look at the 1-hour data. We do see a little more. Actually, let me just. Yeah. Let's start this one over. Sometimes. All right, so this is the 2-hour data. So I do kind of like that, supported by the daily bearishness. Silver looking bullish on the dailies and bearish on the 2-hour. Copper looking bearish on the dailies and bullish on the 2-hour. Bitcoin looking a little bullish on the dailies and bearish on the 2-hour. Hard to find, hard to have all the stars align, huh? Ethereum looking bullish on the daily and not crazy about the 2-hour. The US dollar bullish on the daily and bullish on the 2-hour. The yen, I'd say, coming into some bullishness on the dailies, not so much on the 2-hour. You know what? There's one more that we should look at, which would be the euro. So let's look at the euro on the dailies. Got here, interesting. Let's start over from scratch here. So this 289 is very strong, and the 200, maybe the 114. So between all those, all right, and then the 2-hour on the euro, anything there? All right. So not crazy about that either. All right. So what do we got? We got a decent trade on the NASDAQ in the 2-hour here. 2-year treasuries look bearish. Maybe we wait for a few days. See if we can get a top there on the 2-hour. Similar in the 10s. Gold looks like another compelling trade to the short side. Long NASDAQ, short gold. Silver, kind of conflict. Copper in conflict. Bitcoin in conflict. Ethereum in conflict. And the dollar. Dollar is a pretty interesting looking trade. So I've got long NASDAQ and short gold as the two most compelling trades I see on the 2-hour data. There's the yen, not quite there, and the euro looking toppy. So we could do something with that. Let me pause for a moment and see if anybody is still awake. How you doing, guys? Was that just a lot of information? That was about 30 minutes of cycle analysis, right? But this is what I do. This is how I go through the markets every week, try to find my best trades, looking at kind of a fractal type of relationship, right? How do I have momentum on my side? Do I got the dailies on my side? You know, with a 2-hour time frequency over, you know, say like 150 period cycle, that's about a 2-week period. And so I can usually get like a week-long trade in one direction or the other. So is there anything that you would like me to cover in particular? Let me know if anybody's got any great ideas for what you're looking at. But now that we've got an idea, NASDAQ long, gold short, dollar long, kind of surprised the euro short didn't show up, you know, because they're so negatively correlated, the dollar and the euro. But let's look at now how we might actually put a trade together. All right, so this is my private version of RiskSmith. My skunk works. I use it for the futures markets. We got 2-hour data. We're looking at long NASDAQ, and for me to get the exposure level I like on the NASDAQ, let's just put in one contract. One long, one NASDAQ, and we'll turn on gold. Short, one gold. I think we're going to have to adjust those levels. And long, some dollars. Maybe think about $4 contracts will get me close to risk parity, but we'll see. And then down here, I just do the same thing so I can kind of compare portfolio A and B as I make adjustments. All right, let's see how those go together. You can look here too. This is the correlation data on the 2-hour. So the NASDAQ here, right? It's negatively correlated to equities, negatively correlated to gold. I prefer something a little more uncorrelated, but and it's positively correlated to the dollar right now. Interesting. Natural gas. You know, we didn't look at natural gas. That could be interesting. Platinum and palladium. That could be interesting. Maybe we're going to have to expand our search a little bit. But if so, natural gas, palladium, and platinum, and 30-year treasuries uncorrelated. All right. I guess I should have looked at this first. Gold is also uncorrelated to 30-year treasuries and to Bitcoin and to natural gas. And the dollar is uncorrelated to natural gas. All right, we got some more homework to do. Let's take a quick look at those, actually. So here we are, kind of getting the overview at a glance here across the different markets. Come on. All right, not sure why that's taking a minute to load, but let's go back here for a minute and look at natural gas. We do have some pretty interesting, strong cycles. You know, if we're looking at a 2-hour trade, just to yeah, could have a little bullishness there. Let's see here on the all right. Oh, there it goes. All right, natural gas 2-hour data. Where are you? There you are. Oops. Nice. Nice cycles here. Like that. So that's pretty interesting. Some bullishness in natural gas on the 2-hour that has some support on the daily as well. Momentum, I'd say, turning bullish. And momentum here, turning bullish. Okay, now we're talking. So uncorrelated to the NASDAQ and gold, and got some bullishness. So let's look at, yes, long, some natural gas, and we'll have to resize these things after. All right, that's enough to at least get us started. Restart and run all. While that's going, we'll look at one more thing, which was 30-year treasuries. Okay, so daily data on treasuries, 30 years. Remember there was conflict between the dailies and the 2-hour. What? Didn't mean silver. What happened there? I get the wrong one. Okay. So 131, pretty good. 60-ish, 59, let's say 172. So what's going on here? The 131 is kind of top, or the 172 is topping. The 131 is bottoming. Nice momentum, positive momentum divergence here. 95 also on the bullish side. So that's pretty supportive of some bullishness on the dailies. And if we went to the 2-hour here on the 30 years, nobody wants 30-year treasuries right now, right? I mean, there's a pretty stunning consensus that 30-year treasuries are the worst possible bet anybody could ever consider, which is why I'm interested in them. So that's interesting. That's interesting. That's interesting. Okay. All right. I like it. So we've got a little portfolio coming together here. Just going to talk out loud here. Look at my position sizes. So I'm kind of overweighted in gold here and NASDAQ. Might need to size those down a little bit. But on the whole, yeah. So a little smaller in the NASDAQ and a little smaller in gold. Let's try to wind those down a little bit. So gold Oh, I got 2 contracts on there. Right. NASDAQ, let's go with half a contract. Okay, that'll do. And then we're going to look at adding some long Treasury here. So where are we at now? Still a little heavy on the gold, but could up the, all right, up the bond, Treasury bonds a little bit. And the natural gas looks good, and the dollar looks good. A little more bonds, and then the natural gas is good. Okay. All right, so let's finalize this. So Treasury bonds here. Yes. Long, let's say 3. Natural gas, yes, long 3. That looks good. Dollar, add another contract there. So ZB, yes, long 3. Natural gas, yes, long 3. I think we got that now pretty good. All right, so we're getting up there, 46, 47% diversification. Risk exposure, $15,394. That's not trivial, right? That's a significant amount of exposure, and you can, scale this up and scale this down. But let's see, what's the difference between these two portfolios? I thought they were the same at this point. We don't have the NASDAQ in number 1. So we're getting more diversification. Otherwise, we got 3, 1, 3, 4. All right, let's get these to match up. So we had 5 in the dollars and yes to the NASDAQ. I think that should match them up. Okay. Are they the same now? Yeah, they're the same. All right, so we've got some decent diversification. The position sizes are all in the ballpark of each other, about same fatness there. I think that's a decent portfolio. And if anything, some things we might look at that are uncorrelated, the 5 years, palladium. Palladium could be interesting, but I think that's probably enough for today. So we looked at a lot. We know kind of got bullishness on equities from the daily data. The NASDAQ has the best signals on the 2-hour data. Gold is definitely topping from a cycles perspective. I get it that gold is still, a lot of very smart people are saying gold is, you just can't have enough right now. The cycles say different. I like short, tight stops. I think there's a good opportunity there. Natural gas and Treasury bonds uncorrelated, right? So some nice complementary trades there, and some good signals to the bullish side on natural gas and Treasury bonds. So that's how I kind of go through and set up my 1 week to 2 week trading portfolios. wanted to give you a lot of analysis to hold you over for the next few weeks, teach you how to do this yourself, of course. You can replicate the kinds of things I'm doing in my Jupyter Notebook Skunk Works over in RiskSmith, which is free right now if you want to check it out. And really, that's about it. See if anything's, can you review the DAX, please? Anybody give me the ticker for the DAX? I'm not sure what it is because I don't really look at it. Crude, sure, we could take a quick look at crude, Tony. How far back in time does stability score go? So I like the Klaus Schwab. So we try to do it over 3 iterations of the cycle, basically. Maria, very awake, utterly interesting. Thank you. This is kind of what you have to go through if you're serious about markets. It's not easy. It does take a lot of work. I always love the quote from a trader named Jim Twentyman: defy human nature and do the work yourself. So we can educate here on Cycles TV, but ultimately it is work. I was watching Luke Roman's comments this past week. Good as always. Really like that guy. And he's like, I read a lot. How do I do it? I read a lot. I read voraciously. I ingest as many sources as I possibly can, which is what we're going to be doing live in 25 in New York City. But yeah, this is what it takes. This is how it works. If nothing else, just showing you it's not as simple as watching a YouTube video, getting a tip, and making money. It just doesn't work that way. All right, so crude oil and DAX. Anybody give me a ticker for the DAX? Breakout in thoughts on recent breakout in copper. We could take a little closer look at that, sure. All right, if anybody can give me a ticker for the DAX, I'll take a look. Or maybe I'll try to find it on Yahoo Finance. All right, so we can close some of these things that we're not using anymore. Not using the yen, the euro. Dollar looks interesting. ETH, nope. Bitcoin, that's tempting right there. But when something makes new all-time highs and momentum's not curling over, it's hard to get on board. Copper, we're looking at copper, pretty big move there, but you know, copper's been making some dramatic moves lately. Meanwhile, that momentum, this is the 2-hour data on copper, right? So what are we looking at here? This 320 and 83. That's some strong momentum. So I wouldn't necessarily want to step in front of that train, and the cycles are looking bullish on the 2-hour data out until the end of May. Even on the daily cycles here, they look bearish, but momentum is still moving up. So on the whole, copper, I really wouldn't want to be short. Silver, gold, you know, the momentum is kind of the same story in copper. Being short gold right now is risky, but hey, markets are risky. And if we look here, you know, we do have on the 2-hour data some stepping down here that looks interesting. We're not doing anything in the 10s or the 2s. Okay. All right. So we were going to look at crude. Let's see here. How do we do that easily? There's crude. The daily data. Crude is, I'm pretty bullish on crude actually. Good call. Should have looked at this one. So That is very interesting looking from the bullish side on the daily cycles. And let's look at the 2-hour cycles on crude. Got a big one here. Not as cooperative. So let's say 230 and 114. When I see a 1-2 harmonic like that, that's pretty interesting. But the big cycle in crude on the 2-hour data just ain't. I wish it were more bullish than it is, but that's a good one to watch and see. If we come down here and we haven't made big gains by the end of the month, and we've got some momentum divergence into a 2-hour cycle low, I'd be pretty darn interested in that. All right, let me jump over and see what the ticker is on the DAX for Yahoo Finance. Okay, just DAX. That's the ETF. We could probably do that. Let me just see if there are other indices. GDAXI, I'm not sure. Is that the German DAX? Probably a German DAX index. I'm guessing it is. So we could look at that, or we could just look at DAX. We'll start with DAX. So interesting, the 273 there. Very strong cycle on the daily data. Momentum is got a negative momentum divergence on new highs coming into a daily cycle top. So we can look at a little more data and see. So that makes me pretty nervous. Go back to 850 data points ish. Okay. So you got that one, that one, that one. You got cycles looking very toppy with a negative momentum divergence, but it hasn't curled down yet out of that top. So going back to crude, I'd be keeping an eye on that for later this week. If we get through this week without any huge moves to the upside in crude and no huge down moves, and we got a positive momentum divergence, I'd be licking my chops with those daily cycles. All right. Almost an hour of free Cycles TV. So please join us in New York City. If you're not going to be able to make it, hit the subscribe button and tell some friends. And if you're not a member, become a member. Support us. Make a donation. We are a 501c3, and we'd love to have your support. So thanks for your time. Thanks for tuning in, and see you again middle of June. And in the meantime, wish me luck for a great conference, which I think is a lot of good stuff's going to come out of, and I'm sure we'll have a lot to talk about after all is said and done. All right, be safe out there, everybody, and look forward to seeing you in a few weeks. Bye-bye.